QuickBooks Online is a great tool for real estate investors. It's an amazing accounting software to help you grow and scale your business. But wouldn't you love to know the 3 to 5 tips that can really help you kick it into high gear? Hi, I'm Nick from Income Digs, and I'm going to talk you through exactly those 3 to 5 of my top tips that I use with my students every single day to take your accounting setup within QuickBooks Online and take it to the next level. These are really simple tips in concept, but once we implement them, they can really superpower the software. I have a course available as well, Real Estate Accounting Bootcamp. It's an end-to-end course. It takes you through really everything that I do for myself and my own businesses, my own real estate businesses, as well as my students. Check it out. We have a link in the description there. But let's get into it. My top tips for real estate investors using QuickBooks Online. So what we're going to talk about today, I'm going to demonstrate most of this in QuickBooks. Talk about classes, customers. How about both? It's an age-end question. Should I use classes? Should I use customers to differentiate my properties? I'm going to explore the potential of using both and how we can kind of get a best of both worlds situation. We're going to talk about using automated transactions to track loan payments and that super tedious task of understanding how much goes to principal versus interest. We're going to talk about reports and how we can utilize reports to find transactions, track mistakes. Reports should really be a foundational part, a pivot point of your entire setups within QuickBooks Online. Journal entries are your friend. Don't be afraid of them. They are potentially a little intimidating, but I'm going to show you how powerful they can be to help you save a ton of time, especially when it comes to year-end transactions. And lastly, my magic sauce here, multiple entities, one subscription. Let's get into it. My top tips for QuickBooks Online in real estate. Okay, so classes, customers, potentially both, okay? So again, an age-old question, should we use customers, should we use classes? If you're in QuickBooks Online Plus, I certainly think you need to be using classes to track property-specific transactions. That's not to say that customers isn't valuable, especially if we're invoicing out to our customers, okay? So if you're a property manager, you're an owner, you're a remodeler, you're going to want to have human beings, actual customers in here to whom you can send invoices and track accounts receivable. And that's really, really valuable, okay? Now, if this is all that we have, we can and we do set up a hierarchy where I have my property and then I have my human beings below it, right? My individuals, my customers. And this is fine. This will track the information accurately. What this doesn't do is give us a really good reporting setup. So I want to bring up the potential of adding both class and customer. So we have these invoices here that I've created. And if you look into them, we have here who the customer is. Notice I've got class here as well. So let me show you what I mean by this. Okay, now to do this, I'm just going to switch over my products and services to be revenue real quick here. So I'm just going to take this 122 Buffalo Street apartment B rent. I'm going to switch this over. I've been toggling back and forth with, whether it's a property manager perspective or it's from the perspective of an owner. I'm going to switch it back to being the owner. So 122 Buffalo Street, apartment A, apartment B. I don't know which one I just did. Rental income, good. And then this one, I'm going to do the exact same thing. I'm going to go rental income. For this one, update historical, good. And then lastly, 456 Maple. I think I have that one as well. Okay. All right, so let's look at a report here. So if I go to, let's say, a profit and loss report, and I did a bunch of transactions in 2018 just to get them on their separate report. This is obviously not recorded in 2018, but okay, so here's my report, rental income. Now, this is exactly what I mean. Having your customers there is essential if you're invoicing out to your customers. But here's what happens when I display columns by customer, because you might want to do this, right? I might want to see how am I doing by property. When I do this and run the report, I get this gigantic thing that's almost impossible to read. So what QuickBooks does without fail is it gives you every level of the hierarchy on a report like this. And it will not give you just the summary level. So if you just wanted to see, hey, how am I doing for 122 Buffalo? How am I doing for 456 Maple? It won't give it to you. And this is only a few properties too. And you can see this is pretty much useless to me. Okay, even if I filter it down, it's still going to give me all of those. So what we can do is, again, we gain huge benefits by having the customer in there. We're able to track accounts receivable, but because I've also added class to all those transactions, I can display my columns by classes and get a super nice, neat report. Okay, hugely beneficial, right? Now this does take a little bit of extra effort, right? We have to have 2 fields filled in instead of 1, but that's why we're going to build into our process having a VA, having a bookkeeper there to help us do exactly that. So that's my first tip is classes, customers, hey, explore the potential of both. Now this also comes into play if you're using projects, okay? So if you are doing any kind of work with projects is only available with customers. So if you want to use projects, if you're doing remodels, you're doing flips, you're doing big time renovations, you probably like to use projects. Look at this really cool portal that you can use within projects. This is great. Okay, but if I want to compare my 365 Central Park flip to my others going on, because we use customers, we need to use customers to turn on projects, we have this hierarchy issue. Every single project is a sub-customer according to QuickBooks, okay? And so if I want to see a drill down or a juxtaposition of my different properties and their profitability, I'm going to get that gigantic report that grows way out of control. So if instead of just tagging everything to your customer and your project, we're also using class, now I can distribute that profit and loss a little bit easier. Okay, super useful. All right, so that's first, classes, customers. Consider using both if you can. Next, I want to get into automated transactions for your loans. Okay, so when you pay your loans, we need to be splitting up the transaction, the expense, into principal, interest, and potentially even tax and insurance escrow. And that process can be pretty tedious, right? So let's say we have a bank transaction coming through and one of these is a loan payment. So let's say that this $1,800, sure, I don't know, it really doesn't matter. We can pick any of these. Let's do this $1,100 one, okay? Let's say that this was, not for Grubhub, but let's say that it was for a mortgage payment, okay? So every time, in theory, what we need to be doing is coming into this banking transaction, we need to split it, and we need to indicate that, hey, some of this was for a conventional loan, okay, principal, probably for a customer, and a class. Again, we can do the same exact thing. Okay, so let's say that in this case, this specific transaction on 9/1/2023, let's say that I look at my amortization schedule, I look at my loan documents, I see that $650.12 was paid to principal, and then maybe I had some to interest. Let's say it was $125.45, okay, and then let's say that the rest was for tax and insurance escrow, okay? So tax and insurance escrow, that's another current asset. If you don't know how that works, we have a bunch of videos on that topic. Also, the course goes into that in great detail, but basically, you're paying into tax and insurance escrow should be a asset. Okay, so I can apply and accept, and I'm done with this one. But what happens when next month comes up? So what I want you to do is I want you to create one of these transactions. Okay, so I'm going to apply and accept this. Okay, now I'm going to go find that transaction. So I'm going to go to my audit log. Okay, and I'm going to grab that expense that I've recorded. Now this one's correct, right? I went through and I did all that work to figure it out perfectly. Okay, I'm going to make it recurring. So this is a huge hack within QuickBooks Online. Making not only invoices recurring, which is certainly something you should do, but that's kind of like the low-hanging fruit. Kind of everybody knows how to do that one. Making expenses recurring is awesome. Okay, so let me go make recurring here. And what I do is I create this expense, especially if it's set up on autopay. If it's not set up on autopay, you might want to make it a recurring bill. Okay, something that shows up, hey, I have to pay this. It's just an expense coming out of our account. Let's create it. Let's create this expense a few days in advance, maybe 10 days in advance. Okay, and maybe we know that it comes out of our account on the 7th day of every month. And so we're going to start this on this date, whatever. Now here is where I don't want you to go crazy making too many changes. Keep it for whatever the last one was. Save that template. What will happen is QuickBooks is going to every month create it with this amount, and then you, or even better, your VA, is going to come in and every month and just tweak these amounts. So let's say this month it went up to $6,555.12, right? Whatever. And then your interest went down to $120. Okay? You can make those little adjustments here or in every single expense without having to recreate every single one. These will come through your bank feed. The match will be there perfectly. The fact that the exact amount came out of your bank account, that still is perfectly locked in. You don't have to mess with that. So this is an amazing hack. I do this with all of the automated payments I have going out. All right, now you can actually do something really similar by using rules, okay? So if you wanted to, instead of creating a recurring transaction, you could go in and take that categorized transaction. Let me see if I got it. I think this one was similar. Yeah, so we could take one of these and you can make a rule for it too. You could just do it, off of the, I did one right here. Here's monthly mortgage. So you could do it the exact same way where instead of creating a recurring transaction, now it's just like, hey, when you see something come through the banking feed and the amount equals this, I want you to split it exactly like this. So you could do something really similar. Either way, you or your VA is going to want to go in monthly, or just wait till the end of the year too. You can do that and tweak those principal versus interest amounts. Next, I want to talk about using reports to find transactions or to track mistakes. So what happens a lot is I'll have students who are like, hey, I made a journal entry and I think it was wrong and I don't know where to find it. And maybe they're using the search function, and the search function is okay, but honestly, the best way to find transactions is to understand where they hit on your reports, okay? There's two fundamental reports within QuickBooks Online, your profit and loss and your balance sheet. Every single transaction that you record will show up on either one of those reports. So I like to find my transactions by going to those reports. And in fact, the balance sheet leads you to the profit and loss. So let's say that I wanted to find that mortgage payment that I just recorded, okay? Now I went to the audit log because I knew I had just created it. But another way we could do that is we can go to the balance sheet to find it, okay? So I'm gonna go to my balance sheet because I know that I paid some conventional loan interest or principal and interest. So I can go to my balance sheet, and as long as our dates are accurate, that's the most important part here. So here's a balance sheet for 2024. As long as that transaction was in my date period here, it's going to show up. I'm pretty sure that that transaction was in 2023. Now I could go all dates here if I wanted to. I could do that. Let's do it. All dates. I got all dates. Now I could drill down into that conventional loan account that I wanted to mess with. Okay, so this right here, I can drill down into that. Now, if I know that my transaction was in a specific month, then maybe you want to do that. Like say, hey, I know it was between 9/1/2023 and 9/30/2023, okay? And then find the account in question, the account or accounts that were used, drill down into it, and you're going to see the transactions that all hit for that month, and now I can click on those and edit. Okay, so it's a really good way to do that. Now, I mentioned that the balance sheet goes to the P&L. Let's talk about some of those invoices that we had set up. So if I go to my reports, let's go to that like balance sheet as of 2018. So here's my balance sheet, and I can see, you know, if I want to track, hey, where's that journal entry for the property that I bought? Okay, let's say that I bought the property in 2018, but here I am reporting in 2024. Okay, so I knew that I bought some property, and I want to find the purchase of that property. What I can do is I can drill down into one of the accounts that was used for the property, go to all dates on this report here, and it's going to show me all the transactions I've ever used to get that property. And so I can drill down into this right here, and it's going to give me my journal entry. This is my favorite way to find transactions, absolutely. Okay, so and then one last example is let's show you how that we can get to the P&L. So here's my balance sheet. Let's do this as of 2018. So if I wanted to find like some invoices, I can start at the balance sheet. Maybe I'm not sure. Hey, is that account P&L or is it balance sheet? Well, start with the balance sheet. And if you're not finding it, like I'm not finding a rental income account here, well, there's my net income. I can drill down into that. There's my rental income, drill down into that, and it's going to show me all of my invoices. All right, so using reports to find transactions is awesome. All right, now you can also use reports to find mistakes. And so what I mean by that, one thing that, a little pitfall of the idea of using both class and customer is it's possible for me to get this wrong, meaning 122 Buffalo Street, Olivia, right? And then maybe I put class 123 Maine. I could potentially do that on mistake, right? So if I do that, QuickBooks doesn't know that I messed that up. But what I could do is I could create a P&L report. So I could say, give me my P&L and display columns by classes, okay? And maybe I want to filter this and I want to say, okay, this is going to be my reconciling report for everything 122 Buffalo Street. So what I can do is I can customize this and I can filter it down. I can say, hey, only give me the customers that are 122 Buffalo Street. So that would be all of this right here. Okay. So if I do that, I run the report, what I notice is I see an amount for 123 Maine. It should be 0, right? It should only show up for 122 Buffalo Street. So I can use this report to highlight to me where I have mistakes. I use that a lot in my business as well. If you're using a VA, using a bookkeeper, set up a few of these saved reports so that you both know that things are accurate. You can do these, you can run these at the end of the year and make sure everything looks great. Talking about the end of the year, let's talk about journal entries and how they have to be your friend. You should not be afraid of journal entries. So a common thing we do within real estate is we move things between balance sheet, between P&L. We're doing some depreciation. We're purchasing property, which should always be done with a journal entry. Knowing how to do journal entries is essential. So one common journal journal entry we're going to do is if we're flipping houses, okay, we are probably recording a lot of our transactions to the profit and loss. So you see that with this 365 Central Park flip, I'm putting everything toward my profit and loss here. So if I drill down into this, I have a bunch of transactions in 2023 for this property. And we want to be able to potentially move those to the balance sheet. So what we can do is we can kind of take a snapshot of our costs and we can use a journal entry to make a move, okay? So at the end of the year, let's say that we didn't sell that property and we want to move it to our balance sheet. We can take that purchase price, which is a cost of goods sold. Okay, we can take the buying costs, which is a cost of goods sold. Holding costs the same. Rehab costs. And lastly, selling costs. Now, those were all had values in the expense category. We're going to credit those to zero them out because if I'm prepping for my taxes and I haven't sold this property yet, I'm not going to record a gigantic loss on my books yet. I'm going to wait till I sell it and then I'm going to record the entire project, revenue and expenses all in one place. Okay. So I have a negative 202.89 there. That's why I'm debiting that one. And then I'm going to put in 29,556 and then my selling cost 22,795. Okay. And then I can put it onto my balance sheet with an inventory. So I can use flips in progress. Okay. So flips in progress, other current asset. And within that, I can say purchase price, rehab costs is what we'll have next. Okay. So we're just going to mirror this perfectly. 125 buying cost, 54.75 holding costs. I needed to have there. I forgot that one. Okay. There's my holding costs. And then the last one would be my rehab cost, 29,556. Okay, so what this would do, it's going to zero out my P&L and it's going to populate my balance sheet for this property. And you're going to indicate the class for it. I'm just going to leave that blank for now. But the point of this is to not be afraid of doing that journal entry. What's cool about this is because we're using both customer and class, it doesn't impact my P&L here. It's just going to now populate onto my balance sheet for 2023. When we are planning out our tax prep, we need to be ready for the fact that our books won't be perfect and we often need to use journal entries to move things around. So I want you to get used to that and make sure you have it. So here's my flips in progress. You can see populated in there. Last thing we're going to talk about is multiple entities, one subscription. Now, this is something that is a relatively advanced technique, but it's really, really crucial for us as investors as we often have many different entities, okay? So QuickBooks is going to tell you that they don't want you to have multiple entities in one subscription. You need one subscription for every single EIN that you have. But just remember that QuickBooks doesn't know that we're real estate investors and they don't know the complexities of our business. Our businesses often do all of the same types of things, okay? So if we can have all of these 5, 6, 7 different entities in one QuickBooks subscription, we achieve the following. One, we save money on the subscription cost. Of course, one subscription less than 5. But second and most importantly is we save time and we gain consistency on the setup. One chart of accounts, one list of vendors, one set of saved reports, one list of products and services, all of that once, okay? As opposed to every single time we add an entity, we are creating a new subscription and setting it up from scratch. We cannot do that. So the way we do this, we need QuickBooks Online Plus or Beyond. Okay, so Plus or Advanced. I'm going to go into the advanced settings here. And just like I turned on my classes, I'm going to turn on what's called locations. Okay, so I'm going to turn on locations here. I'm going to change the label to be business. I'm going to save that. I'm going to click done. And now every single transaction will now have the ability to track not only a class, but also a business, so an EIN. Notice location shows up here. So I have these two entities here that I have in here. So let's say that JMB Investments owns that one. I'm just gonna go through and edit these transactions quick, and then what that'll do is allow us to display by business. I'm gonna track, I don't know which properties are owned by which. I'm gonna say pretty much everything except for 264 Union is JMB. So let me just kind of whip through these quick. Got one more on this side. All right, and then we have that purchase of property that's there too. I have this payment that I made as well. Let me get rid of this one or put this to the right business. And then this purchase of property, I'm going to drill down into this, and this big transaction here. So this 122 Buffalo Street, let's say that that's JMB. And let's say that this one is 264. Save and close. I think I'm close to done. I don't know if there's any other transaction, but you know what? The report will tell me. Got my loans. Let's see this one. Yeah, I think I'm good. So let's now display my balance sheet by business. Okay, so I'm gonna go display columns by businesses. And look at that. I got my one business here, my one business here. Okay, and I have the various different assets, liabilities, and equity for each of them. Okay, now, your accountant, your CPA might get a little scared by this. Okay, so I want you to use the report I'm showing you for your business. When it's time to give this to your accountant, we're gonna do a little massaging of this so that we don't freak them out, right? So let's say I need to deliver to them my 264 union balance sheet for taxes. All I'm gonna do, I'm gonna go in here, customize, filter. I'm gonna go to business, and I'm gonna say, hey, just give me 264 union. Okay, so that gets rid of 122 Buffalo Street. Because now it's only one business, I don't really need these columns here. The total equals what the column is. So I can get rid of there, I can go total. And then I can change the name to be 264 Union Balance Sheet, LLC, right? And I can save this report and deliver it to my accountant, and they get a perfectly looking balance sheet. This also works for the P&L. If I undo that filter, I can drill down into the P&L, and on that as well, show it by businesses. And I don't have anything for that other property yet, or for that other entity. So this is, again, advanced technique. There's a few pitfalls I want you to check out. I have a video specifically on this. Check out that video, and we do get into this in depth in our course, Real Estate Accounting Bootcamp. This is, to me, I think, the main point at which investors, bookkeepers, property managers go from, all right, we're using QuickBooks Online. If you crack this, you're able to really scale your setup, bringing on more properties, more entities, and having it all in one place. You can really make some really crucial decisions for your business, having all that information in one place for everything that you own. So I encourage you to check out and implement the tips I just went through here. These are really game changers for myself and for my students, and let me know if they're working for you. Also, let me know if you have questions on them. I'm looking at these comments every single day. I encourage you to check out all the free resources we have available at incomedigs.com. And of course, our end-to-end course, Real Estate Accounting Bootcamp. We're gaining tremendous traction. The community is amazing. The Q&A sessions are going really, really well. We'd love to have you in the course. If you have any questions about that, you can email me directly at nick@incomedigs.com. We have a link in the descriptions here. And I look forward to seeing you on our next video.